So I was searching for ROBS, that's the acronym for it. It's called a self-directed IRA or rollover for new business funding for business startup, roller for business startup, ROBS. It's a little bit of an unfortunate acronym, but this is essentially when somebody takes their IRA account and they use it to fund a new business that they own. And there are so many regulations associated with that particular type of business structure. So you can look at this, for instance, like this is the IRS. You know, they're on a compliance project, right? So anytime they're on a compliance project, you know, they have some concerns, right, about how these have been being used. And the basic idea of it is that you're not supposed to use your retirement account to benefit yourself in the present day before you're age 59 and a half, right? Or else you're supposed to pay all kinds of penalties, right? And so potentially these self-directed IRA business funding situations can be used to avoid paying tax on the IRA money that hasn't been taxed, right? Because that's tax deferred. You haven't paid income tax on that. So then you put it into a business, it gets kind of washed around with all the normal business expenses, potentially can be paid as a salary to the owner, right? Or to the owner's relatives, right? So kind of getting that money out of the IRA account in a way that's not approved by IRS. So there's just a ton of compliance, you know, issues around this, and that's why it's potentially a very good niche market. So in this example of a C corp, and another thing to mention, you guys, is that this it only is available to a C corporation. That's why you cannot use a pass-through entity and use this type of this business, whether you want to call it a loophole, this way of funding your business through a self-directed IRA. Okay, so if you want to look further into that, you know, it's potentially a very good niche.